Hello and welcome to LedgerCast. My name's Brian Karsgaard. Rolling solo today. Josh is out. That's okay. We're here. We're together, and we're all going to make it, I believe. Before we get to the show, thank you to Matcha for being our partners on LedgerCast. Go to ledgerstats.com/Matcha. You can trade all DEXs at once on Matcha. It's the best way to seek liquidity amongst all the sources of liquidity that exist. They curate it for you right there on Matcha. You can also trade on Polygon, BSC, probably more soon. Users are like beasting on those platforms. So check it out today. LedgerStats.com/Matcha. They also introduced gasless trading, which is nice because gas is expensive, and some other features which are handy. Thank you to Matcha. We're going to have an AMA episode today. So ask me questions. If you're here later, I'm sorry you didn't have an opportunity to ask, but that's okay. We're just gonna chat solo. I hope you'll forgive me. It's just my voice for a period of time. It's gonna be a shorter show, maybe. We'll go 30 minutes or something instead of like 45 or an hour. When FTM on Matcha, we'll have to ask Matcha like when they're gonna deploy and how they're gonna deploy to those different chains, but they'll be everywhere eventually. Their active users are more on Polygon and other chains than they are on Ethereum. I think that's a fun place to start because what we're seeing is the omni-chain standard, I think, where basically the fees are so cost prohibitive on Ethereum that the different chains, different incentives programs are just going to be a big part of the future. And that's great for us as users. That's great for yield farming or airdrops and all this stuff. It's not necessarily great for like the long term of the ecosystem if the brands and the places and the protocols we use are different on every single one. So I'm going to be curious if we end up having stuff where like the blue chips kind of deploy to all, and then it's kind of aggregated and some other stuff. And of course the liquidity between different platforms is going to be a big deal. So a lot of things to solve, but there's probably a lot of benefits to kind of having the omni-chain forevermore landscape. I do think there'll be value accrual that goes back to Ethereum in that case, but we might as well talk a little bit about news first, because Bloomberg reported news on a Friday that the White House weighs wide-ranging push for crypto oversight, and the Biden administration may do some kind of executive order, basically tasking different departments to come up with a path forward on how they'll approach crypto. Seems like FUD. Seems like the market's already kind of shaking it off. One of those where maybe if they have an executive order, there's probably not a lot of specific stuff in the executive order. It's kind of like a demand to figure out more stuff. And they're already doing that anyway, so probably nothing burger, who cares? In terms of Bitcoin, at this moment, it's $53,999.65. 54,000. Anybody have 54,000? $54,000 Bitcoin. $3,566 Ethereum. My ability to know the price of Ethereum and Bitcoin have really gone down within several percent. I just don't even know. That's where we're at, and we will skip to the first question. Jeffrey asks, what do you think about the potential BTC ETF being futures-based versus spot-based? Doesn't that not directly put upward pressure on price since it's investing in the futures price? I feel like I'm missing something. Jeffrey, it's a great question, something I wanted to talk about, and I'm glad that it's first, and it was just by the luck of the order in the chat. So let's talk about the ETF. There's massive rumors, winds of the ETF being imminent, and the ETF of choice being a futures-driven ETF. So the conversation here is, what does that actually mean? Well, the CME futures market is cash-based, meaning it's settled in dollars. It's basically like a synthetic version of Bitcoin, because they're not physically backed Bitcoins that are behind everything that's trading on that ETF. And therefore, on that futures product. Therefore, if the ETF is based on that, it would also be a cash product on top of a cash product. So it can trade all in dollars, and technically, if the price were flat, it's not like in the background somebody's buying and selling actual Bitcoin, or Bitcoin is moving hands physically, as like a physically settled ETF would be, or a spot exchange, the way that coins move. Whereas think of other securities on the stock market that represent Bitcoin, like GBTC is a black hole for Bitcoin, so that as they issue new shares, it's because someone came in, said they want Bitcoin, and then Grayscale goes and buys Bitcoin, physical Bitcoin on their behalf, and then issues shares and then puts it in the vault. And then that's essentially like this big black hole, as long as the Grayscale security continues to achieve more share distribution, more people coming in saying they want it. If it trades at a discount, which it is doing now, at like a 15% discount, basically means people are seeking liquidity in the security itself, but you can't like redeem that Bitcoin back out, so they get in trouble for that. So that's what creates that discount, in addition to some other things like the 2% fee that they carry, that in other structured products can sometimes cause maybe like a 7-8% discount on average, but it's a little weird for Bitcoin to be carrying a 15% discount, or for GBTC to be carrying that discount. So this gives good reason to need an ETF that's instantly arbitrageable, that has great fee competition amongst multiple solutions. And Gary Gensler in particular has talked about his willingness to see a ETF be approved. Now, an ETF is the domain of the Securities and Exchange Commission. So therefore, Gary Gensler saying, I'm okay with this, is basically the market saying this should be so. So therefore, we're going to see it. Like, I think it's imminent to see the futures-based ETF. Futures themselves were based on the CFTC doing things, so it wouldn't matter what Gary Gensler says. But for whatever reason, he's more comfortable with it being based on the futures market rather than the spot market or physically backed products, because in that case, I think you basically just have to make a lot more decisions for the ETF application itself. Like, what markets is it based on? Does it matter for? And is there some kind of implication of who has control over that market? It can be manipulated. How can you regulate the potential manipulation? Whereas when it's based off of futures markets, currently CME and some much smaller futures markets exist. What'll be interesting is like if FTX creates a futures market with LedgerX, the CEO of FTX US, I think, had a tweet storm or whatever about that the other day, being a possibility. Then the ETFs could represent kind of a conglomerate of futures markets. And the regulation of futures markets is better well known. Those future markets with CME have been around since 2017, late or early 2018. So it makes the regulatory landscape of that maybe be a little easier. So that's perhaps where Gary Gensler's coming from. So that's my thoughts on the ETF, but it is not this like black hole for price, but it is like if you force the ETF prices up, the spot market will arbitrage that, I believe, pretty well. So yeah, and there's like some enormous number of these ETF applications that are up for decision throughout October, I think from like October 18th all the way until early November. And the likelihood is, in order to prevent the SEC being a kingmaker of one ETF, they will approve a bunch of ETFs together. So we'll actually see, half a dozen Bitcoin ETFs all at once. And that'll be great for competition and all of that. And so that's going to be really exciting. Let's see. All right. That's basically my ETF news. I think the ETF is imminent. I think we're going to see an announcement about the ETF within the next 2 weeks. If it's down, if it's negative, we will instantly go to 40K. If it's up, I think we'll go to all-time high price exploration and we'll be incredibly bullish. the ETF will not be a sell the news event. The ETF will be a massive push on price as you open up retail to the potential of participating in crypto from accounts that they used to not be able to participate in crypto on. So I think when the ETF is approved, there will be a lot of gyrations, but inevitably the long-term chart, the long-term path forward will carry. And I think we'll see incredible price exploration on this chart. And that is our path to, in my opinion, upwards of like $125,000 per Bitcoin before it cools off. I think 100K is a magnet, and I think the likelihood is you blast right through that. And we end up 125K, something like that, settle down. The rotators come in, and we see the move to Ethereum. Fun potential trajectory is, well, there's also Ethereum futures. If there's Bitcoin ETFs, should there be Ethereum ETFs? I think the fun rotation game, the fun narrative game will be, well, the Bitcoin ETF, we don't think it's priced in. The potential pending Ethereum futures ETF is definitely not priced in. So that makes it really fun for the potential Ethereum pump after that. So I'm very excited for potentially a 2-trade setup where we can play price discovery and massive macro movement in Bitcoin, and then also catch Ethereum if they move independently. Now, the Ethereum chart looks really good solo, so it's basically just hoping people piece out of Ethereum for a while, and that like Bitcoin dominance goes up. We'll see. Like, this ETH-BTC chart looks like it's on the verge of a decision, and this is the type of decision that I think could be possible where Bitcoin runs. You have ETH break down relative to BTC while it's flat because people go to BTC for the move, and then Ethereum moves. That would be amazing. I don't know if it would stop at 0.055. 0.043 is a horizontal target, 200-week target, death of Ethereum party target, and that would be an amazing buying opportunity, because I do think that could happen in 2 or 3 weeks. It could be a quick trade, maybe 2 or 3 months at most. And then I think you'll find a massive bid on Ethereum as people realize Ethereum would also become a candidate for an ETF. Nothing else has changed about Ethereum. There's a lot of good bullishness, a lot of burning, a lot of yada yada, a lot of fun stuff that could happen. And then, no, I don't think that means you instantly then move on to ETF all the things, because Bitcoin and Ethereum have futures markets. Bitcoin and Ethereum are the most decentralized coins out there. It's kind of the fewest concerns in terms of like what could happen with an ETF. So that's my thought in terms of Ethereum and Bitcoin. The potential glorious ending to the major moves of this cycle being the 2-stage pump. Bitcoin, then Ethereum. Now, I was thinking at first maybe Ethereum would go, then Bitcoin, because the chart looked more constructive. This ETF narrative kind of came to fruition and seemed to really start to be talked about more, brought about more. It seems like, especially now, like we're really counting on this occurring. So it made me switch the order of the potential trade. So that's different than what I originally thought. I originally thought maybe Ethereum would run this time. Maybe they'd run at the same time. They still might run at the same time. But my hope, since now I'm positioned this way, is that Bitcoin runs first and then Ethereum runs, and then all alts that get destroyed on a relative basis during that time then have a nice little exit pump, or whatever you want to call it, after that. I think that could be very possible. So the 3-trade leg setup is kind of your absolute best case scenario, and then everything has to chill. I think that could take until next tax season, March, April type stuff. But I think it leaves us for the potential to have a very, very bullish end of year for Bitcoin, and then a very, very bullish like January or so, maybe February for Ethereum, and then some alts and stuff. And that ends up looking a heck of a lot like 2020, a heck of a lot like 2017. the seasonality stuff is real. So it leaves a window for, I don't even know if you call this double bubble or if it's super cycle or what, but it sounds good. And then I'll play it that way. And if I'm right, if I win, then I will be very happy. That's like a life-changing type of opportunity, kind of the multi-leg trade. Don't overthink it. Play the setup. See what happens. We'll see. Like, if dominance does its thing, which I think it can, then that's what I'll play. Like, I'm not trying to be a genius. I'm just looking at it, just looking at what's out there. I got a bunch of levels on this dominance chart. But basically kind of getting back to this 200-week moving average would be the type of Bitcoin dominance trade that you might be able to find. So until that tells me I'm wrong, I'm going to give that a shot. All right. That's my Bitcoin, Ethereum narrative. In terms of Ethereum, like the bullishness of the burning and all that stuff, ETH 2.0 potential is not wrong. Like, I think all that's still right. Grant asks in the chat, ETH 2.0, is it sell the news, market top? It depends on what the price of Ethereum is going into it. Have we priced it in well or not? And if what the seasonality looks like, I don't know when exactly ETH 2 is supposed to launch, but basically I think Ethereum will move after Bitcoin. Everyone I've asked on like Up Only and stuff, they have targets between 10K and 100K. I don't know, but higher is my target for Ethereum. Whereas for Bitcoin, like Sue's been talking a lot about like 1 million is programmed. I'll definitely sell too soon if it goes to $1 million. Like, I'll keep some token Bitcoin, but like, I don't know if I could carry the majority of my portfolio for like a full gold flippening or whatever. And I also don't know what kind of world it is when like Bitcoin is $1 million. Like, what's inflation done? What's the world look like? I swear, every time I look at gold, it's $1,750, and it's still that way today. We got asked about Legacy. Legacy bounced pretty well, but ended kind of crappy today. But on the week, it's a nothing burger, kind of a don't know candle for Legacy. Don't really know what to make of it. Trying not to use it in my trading plan too much, because I think there's a lot of fundamental stuff happening in crypto itself, whereas Legacy could do a bunch of nothing for the end of the year and doesn't really have a massive impact on crypto. All right, so that's the macro stuff. Bitcoin, Ethereum, ETF, bull, not bull. TLDR, very bull, unless it shows me otherwise, but the Bitcoin chart looks very constructive, higher high on the weekly, right into resistance. And this just looks like the type that can just curl right up. If it does go down, again, we'll want to see like 40K hold, same as last time. It starts getting a little dicier, but you can draw this kind of long-term consolidation many ways. My guess would be that you have like a day or two from an ETF rejection or something that are like really bad, and then it kind of gets back to normal. All right. Next question is about a coin. So do we want to ask anything before we get to that? Gold lost to BTC. I actually agree with that. I think gold has lost to BTC. I think that this is the question I pose to my friends, like normies who are trying to get into crypto, and you try to think about it. And I say, basically, you have someone sub 40, sub 50, I don't know, a modern thinker, I don't care how old they are. If they're sub 40, you say, would you rather own the equivalent, let's say these are equal, they're not right now, but like if they were equal, a pound of gold in your house or something, or 1 Bitcoin if they were equal? And I think most people would say they'd rather own the Bitcoin today. I think most people, digitally native, modern people, would prefer Bitcoin to the equivalent amount of gold for the future. So I'm very interested in that. I'm interested in the market cap ratio of Bitcoin to gold. And I think no matter what, Bitcoin's part of the conversation, and therefore it's almost destiny to make up ground on it. Because once you allow it into the conversation, it's like, oh my God, I don't want to say like the virus thing, but like it gets in there and it creeps about. It's, there's a type of plant that somebody was telling me recently. I forget the name of it, but it's like the weed that grows up your trees, like the vines and stuff. And it's like, you have to like hammer it down, get it out of there. Don't let it in, because once it does, it just takes over the whole tree. Wisteria. Someone said kudzu. Same idea, whatever. And it can kill the tree. So if gold is the tree and Bitcoin is like the wisteria, kudzu, the annoying weed at Peter Schiff's feet, and then off it goes. So that's fascinating, very possible. It seems the most likely outcome for the fun, for the memes, for the digitally native, and gold will just forever be $17.50 an ounce. It'll lose the peg from a buying power perspective because, that's. I think that narrative works fine. I think you can see that happen, and for a long time, people have been like, "No way, not happening." Milam in the chat said the weed is Spencer, which is Peter Schiff's son. So. Yeah, that's the thought. Young says gold's only better if you think the world is going to full nuclear apocalypse, basically meaning you cannot transact digitally whatsoever, which is a good point. Like, if you lose the ability to have electricity, I don't really know how Bitcoin works in a world without electricity. So that's the thought there. All right. So next question is, Tezos, scam or not scam? If Tezos is gonna hold it, this is a good place to hold. Like, Tezos needs to hold $7 or so, or else it's got like kind of disturbing bat potential. If you remember the basic attention token, where it just ranged forever, even like it broke out at all-time highs and then went to like all-time lows right after it. The relative trade still kind of sucked on Tezos. Like, this relative trade, weekly candle relative to Bitcoin, is bad. That is, go to jail, go straight to jail. Do not collect 200 Tezos. You're fired. That is breakout over type of candle. So it's got some work to do. I have no interest in owning Tezos anymore, even though I had a show title said, you're going to make me buy Tezos. I actually bought it around this level, around $7 on the break up, but I sold it because I became a Bitcoin maximalist with this ETF stuff. And I just think it provides headwinds for everybody from here on out. We did Weekly Open and talked about how everybody was in profit on Tezos. And I was like, oh God, this is the Tezos top. Looks like somebody was basically providing a floor at 820. It had the worst little breakout and then it's kind of struggled since. So I don't know what to think about that. I do not like the relative chart anymore. The USD chart, it looks in danger of going back to jail, of just like, maybe it's higher lows, higher highs. I don't care. It looks like it wants to be boring. And in the sight of potential Bitcoin price exploration, especially, back to jail. Sorry to Tezos. I also got asked about FTM and Harmony. I don't even know what Harmony is. I'm booming hard. FTM, Phantom, it's at all-time highs. It's at 240. This thing, March 2020 lows. I like to see, like, what were the COVID lows? 0.0025 cents. Dollars. So if you bought the weekly low and you held it to right now, you would be up 91,000%. 91,000% if you bought Phantom the week of COVID lows. That's a lot. Like, you are buying somebody's 91,000%, somebody else's. So let's play a new game. This is another game I like to play. And this isn't to say it's bad, just saying what it is, okay? You buy January 1st, beginning of this alt cycle. You are buying at $0.0165, so 1.6 cents. To now, they are up 15,000%. 1.6 cents to $2.40. I have a very hard time buying that chart. They have a lot of incentive program stuff going out. Phantom is a lot like Avalanche and other kind of layer one alternatives. It just makes me, Phantom in particular, just makes me, I don't know, a little more nervous, kind of like Polygon did. I don't know what the security model of Phantom is. Didn't seem like it was stood up quite as well. And I wasn't early. Like, if you're in that, sure, hold it, have fun. You're a king. I'm not buying that when the setup for Bitcoin. This is the problem I'm going to run into talking about every single one of these alts. I'm not buying somebody's turbo green candle and be in their liquidity when Bitcoin looks like it's about to break out. And when Bitcoin has a potential generational fundamental news item imminent. I'm not being their liquidity. So therefore that makes me think like a lot of these, they're receiving liquidity right now. You know, like these are moves that are very positive if you're in and you're looking to say like, you know what, I would like to be out of this now. It would be nice to use that type of move for such a thing. I think Phantom's got some cool stuff. Andre's building on it. He's building his NFT marketplace. I think the omni-chain future is real, like I mentioned. These to me, Mr. Rotator lately, whatever, they're a rotation and there's not a relative value there for me right now. If you can go earn yield on WBTC on Phantom, which I bet you can, that might be great. But I think the buy Phantom outright play might be a little too low IQ for me. So that's my 2 cents there on Phantom. I don't know what Harmony is, so sorry. Can I look at AVAX? I can look at AVAX. AVAX had a move like I feared, which was kind of back to the reload zone. Didn't quite get there. Like 56 was its all-time high breakout in February. It retested it once, and now it's kind of churning back to it. The problem is it had like a good daily off of it, but now we're fading the next daily. It just doesn't look that strong. And unfortunately, it's going to be the same problem. All of these, if the BTC stuff is real, just might have to chill. It might have to chill for a while. And what I could see is like, you know, something like that. And it takes a while. And guess what? This is your like beginning of the year, try again type of stuff, you know? And that's, I like Avalanche Rush. I like all of it. I like the chain. I like the bridge. It's all works really well, but sometimes there's a time and a place. You know, I've done fantastic in the Avalanche ecosystem, but it's not really just because I held AVAX. Like I had one trade in AVAX from down here, in early September. So like 37 to 70, 70 something. So I pulled a double in AVAX, but a double when some stuff went like 10x is like you have liquidity. You can buy and sell as much AVAX as you want, or at least most of us, you know, normal people. But like there was almost everything on AVAX more than doubled. So holding AVAX was kind of the lowest beta move on the AVAX ecosystem, which will you expect? So the real question is, do you think that there's potential for turnaround inside the AVAX ecosystem? And I think so. But that's like really people chasing what's shiny. Joe got a little over its skis. The Joe token, which is kind of the sushi of that ecosystem. Literally, like the smart contracts have the same names. And so like there's still, I think, some good farming opportunities, but it's going to be the same answer that I just had. It's not loading for me. There we go. Yeah. See, like every pump is just getting faded, you know, like it went to 420 double top and then went sub $2, and now it went to 280 and now it's back to 250. And I think what you're seeing here is people basically are willing to get out, and they're willing to use these for yield still, but they're not that excited. Now there's some other stuff that's just gone absolutely bananas in that ecosystem. Time is one. I still have exposure to this, and it's at 6K. Absolutely insane. Amazing. But that's not everything. Like Yak is another one that I did have exposure to that I don't anymore. So like, I think if you're yield farming, if you're on something that still has momentum, that's fine. But these so clearly lost their momentum, and like Yak went to 15K, looked like it was on the verge of breakout, and when it failed it was basically your sign to get out of there. And it went down to 4,500. Like, that's a big drawdown. Like, if you buy that breakout, it really sucks if you're down 66% in an ecosystem where everything went absolutely bananas. And the problem is, like, some of these people that bought back here, if they didn't sell before, well, they bought at 1,200. They could still be selling at 6K. So that's, always something you have to be wary of. That even something that looks like it's down a lot, some people are still up a lot and willing to sell. So there's some other coins in that ecosystem and elsewhere. Another one that I still am holding for a variety of reasons is Spell. Like, I'm not entering Spell here, but from a long-term bullishness perspective, like relative to Maker, I think because of the regulatory issues with USDC and Tether, which are fully backed, the case for something that's either algo driven or like synthetically driven, so the collateral's in ETH and Bitcoin and then pegged somehow to $1 or stable thing. There was one called Rye mentioned on the show the other day. I don't even know what that is. But Maker and DAI is one option. The problem with that one is it's backed like 2/3 by USDC. So if USDC has a problem, Maker has a problem too. So a lot of people have pushed for Spell and MIM, which is Magic Internet Money, which is the funniest outcome, because why not make Magic Internet Money the winner? It has just mooned on kind of anticipation of that. I'll never bet against Danny. Like, he's just a gigabrain, and yeah. So like, we just looked at a couple of things that I have exposure to, but like, I'm also not saying enter here either. My entry was just good enough to where I'm allowed to have exposure still. And anyway, so that's my thought on those. I didn't mean to like dig that deep down the rabbit hole. Another realm that I think is worth talking about is DeFi. DeFi is poking its head up a little bit, but it's really relative to Ethereum, no change from what it was before. I laid out this trade weeks ago as, if it clears this, you can play it higher. And it's just kind of no man's land still. It's lost a little bit even relative to Ethereum. So if I looked at this relative to BTC, then it's going to be even worse, and it is. So like, DeFi is not worth owning holistically relative to ETH, relative to BTC. It's just not showing it. Terra Luna is another algo stable, or differently backed stable. Sorry. So yeah, there's Luna, there's Spell, there's Maker, there's Rye. Again, I don't know what Rye is, but the other ones try to be $1. All of those are options. I think the algo stable basket of goods collateral, so like not even dollar stable, just basket of goods stable. I think that's going to be a narrative that we look out for several years, and especially if regulation comes in hot for USDC and for Tether or whatever. Wi-Fi is still undervalued governance relative to LTV. I mean, I think most of DeFi is undervalued, but it doesn't really matter, because if the numbers don't go up, then it's just not worth doing anything with. Wi-Fi has gotten a bid recently, mildly, as in like, the zoom in meme. It's 2 days of up right into fast moving averages. So is that a bid? I don't know what you call that. Again, if the narrative is not obvious, if the narrative is not strong to hold something relative to Bitcoin or relative to ETH, then go to the source with the greater liquidity and then look for asymmetric opportunities where they may exist. That's what my aim is. And right now, sometimes this is just how it is. I don't see as many of those asymmetric opportunities. And sometimes like everything looks like it's about to go absolutely ham. That's just not how I feel right now. Right now, I feel like the ball is in Bitcoin's court. And we figure out what Bitcoin wants to do, and then we go from there. So that's It's hard for me too. I promise you, every now and then I see something, I'm like, I want to buy it. I freaking bought ZRX again. I'm actually doing okay, which makes me nervous. It's just that I looked at it and it's like, it fulfills my criteria for what to buy. I looked at it versus the dollar and it looked like it wanted to break out. Versus ETH, it looks like it just has this like multi-month kind of grind along the floor, like it wants to break out. Versus BTC, it's on the bottom in it of the range. And just I was thinking about it because on a up only episode, I was talking about how like wrong over and over again, need to step away, and therefore I was wrong here. But the thing is, I don't have to hold it forever, right? If it loses out on the relative basis, I can sell it again. But it might not do that this time. So it was a peak opportunity, so I freaking bought it. I bought ZeroX again. So I don't feel bad, just how it is. I bought a small enough position to where if I lose on the trade, that's fine, but a big enough position to where if it does what I think it could do, then I'd be very happy. Nice one. In the chat, going to 0x. I don't think so. What moving averages do I use? That is from Vlad the Inhaler. So on every chart, like the one I have on the screen for people watching on video, I use a 20 SMA and a 200 SMA. SMA, simple moving average. It is purely the average close of the candle for every period over the last 20 candles or 200 candles. Why do I use these two? I really like them, especially on high time frames, daily and weekly. But I find them useful everywhere. The 200-day moving average, 200-week moving average is a boomer standard where people look at it, therefore it works. That's kind of where a lot of tools come from. And for momentum and type trades, trend following trades, I find it very valuable. The 20 is, I admit, is a little more ambiguous, like, because, you know, you'll have people that are like, oh, I only look at the 18, I look at the 50, I look at the 21, I look at the 26. The 20 is what I use because it's also the Bollinger Band midline. Bollinger Band is very popular for looking for volatility, and the midline is part of different strategies for that. That is typically using the 20-day or 20-period SMA. Additionally, like if you look at Bitcoin with the 20-week, it just bounced off of it perfectly in the bull market, hit it as a ceiling perfectly in the bear market, and has generally provided nice signals. One of my favorite is kind of the cross, flip, and bounce. And that's what we see Bitcoin doing right now. That's like one of my favorite trade setups with a fast moving average like that. Also, when the slope goes up, yada, yada, yada. The return to the mean is what happens all the time because the price comes back to its average. That's what it means. There's no difference between SMA and MA. There's a difference between SMA and EMA. The exponential moving average is the EMA. The exponential moving average is weights recent candles greater than candles that are further away. So if you have 20 SMA, all 20 candles are weighted the same. If you have a 20 EMA, it's exponentially larger weighting, or like an exponential curve on the weighting of each value of the candle. So it's faster. And if you're like putting it on paper yourself, it's much harder to calculate. So simple things like simple moving averages are easier to calculate, and one of the reasons I like them. Yes, price has a mean. All right. That's today's technical analysis, and that's just my way. Like, once you get used to looking at a chart, if you're someone that looks at charts, if you're looking at a chart and you learn how it tends to interact with the tool that you like, it doesn't really matter what tool you use, like, as long as it helps you be profitable. These are trend following based tools. You can also use momentum, you can use like momentum tools like RSI to think, or volume. I mean, volume is super important. I actually keep RSI on my chart and then collapsed, but like a divergence on RSI versus price is gonna fail you as much as it succeeds, but sometimes it might help you fit your bias. And it basically says that like, oh, well, you made a new high, but the RSI was lower, and it's a divergent move, so that it makes you feel like it kind of ran out of energy, you know, the last gasp before collapse. or in the reverse of that, kind of the last gasp of selling before the recovery. If the price keeps going down, but the RSI has started to tick up, kind of gives you hints that people are accumulating as others capitulate. So those are tools I use. I've used them for a long time. That's why I use them. A lot of people look at them. A lot of people use them. That's why I use them. You can use horizontal lines and oftentimes come upon the same results. It is up to you and what you feel comfortable with, and if it helps you analyze. Some people, they may be better off not looking at a chart whatsoever, and they can still be profitable. For me, I like the charts. I like to look at the charts. I find them to be valuable alongside like candle structure and pattern analysis, but I don't try to look at absolutely everything. And when I look at those things, candle structure, pattern analysis, I usually do use them more in like a level sense. So it doesn't have to be like a perfect, ooh, look at this ascending triangle, or no, that's a rising wedge or whatever. It's kind of like, where's the price relative to where the price used to be, relative to where the price closed before. Is someone selling here versus someone that bought there? Are they comfy or uncomfy in that situation? And that's really all I'm trying to analyze in those things, because all this chart stuff is just psychology of someone's purchasing decision and selling decision portrayed in a visual manner. And when I'm doing technical analysis, all I'm really doing is trying to determine what that psychology means. I do try to keep it simple. Ichimoku is the way Josh likes to keep it simplest, and I actually like Ichimoku as well. The only thing I don't like about it is not as many people use it. That's the only thing I don't like about it. Sometimes it's fantastic, like in terms of being a good all-in-one visual representation, because you don't have to determine quite as much of like, ooh, this is exactly the criteria that you determine. It tells you like cloud is green, price is above cloud, yada, yada. Tenkan is above Kijun, and therefore bull. Like if that's your criteria, that's fine. For me, it's just not as many people use it. Therefore, from a source perspective, it's not as good. One other reason one other thing I'll talk about is seeking targets. So target, sir. That's a question I get all the time. Okay, price exploration. Yay, where do we go? Price has never been here before. So therefore, the opportunities are limitless. Where could we possibly go to? So you got to, God, that's a mess. So you got to figure out where you're going to go using something. Could be round number bias. It could be measured move. So oftentimes from the prior consolidation, the prior high and the prior low, an equivalent move. So like Bitcoin goes from 64 to 29, you kind of take the height of that pattern and then draw it out, and that might lead you to here, so like 100K. That's also a round number, so that's a pretty juicy little spot. One of the things I like to use is fib extensions, because Fibonacci numbers work for some reason. I don't know why. Again, people look at them. And I think we could essentially go and battle with each fib. I talk sometimes about running the fibs. And just use each one of those, analyze each one of those. The 1.618 would be 87, 2.618 would be 123, 3.618, 160, 4.618, 200K. So 200K is my congratulations, you held to here, exit all markets, because the 4.618 is the full run the fibs move. I love when that happens. It happens in crypto. It only happens in crypto. I've never seen any market that moves so insanely as crypto. And a full run the fibs. This is what Aave did when it went from 100 to 500. This is what Solana did when it went to 200. Like, you can point at so many coins that fully ran the fibs, meaning they went fully to like the 4.618 out of a consolidation and breakup. It's absolutely incredible. It's absolutely insane. In traditional markets, if I were to do fib extensions, I could probably just keep the 1.618 as like a peak target. The moves are just insane in this space because of the volatility, the way they trade, the momentum in the markets, the liquidity profiles, for lots of reasons. For Bitcoin, a 4.618 extension is possible, but I don't expect it. So therefore, I probably wouldn't be around for 200K because I'd get less and less confident as it starts to run the fibs. If I was to say, here's my big picture thinking cycle top or like cycle break, if we go super cycle, My cycle break personally is around that 125K, $123,456.78. That's 2.618. It's blasts through the round number bias at 100K, and then you have people FOMO, and then you have regrets as people sell into it. That's the way I could view the Bitcoin pump happening. So I, on a break into price expiration, I'm watching very closely by the time we get to about 87K. Of course, you might bounce around at the all-time highs a bit, 60Ks. Very close. I'm watching very closely around 87, 85, 88, whatever is in there, 1.618. If it can clear that, I don't think 100 is stopping it. I think 100's a meme. Very rarely do you just stop right at that level. You might have like some crazy daily wick around it as people sell the round number bias. I think it would probably work its way up to the next fib, 123. So 123. Bearish plan is if it fails the 20-week. Or if it fails from a price action perspective in a way that I'm not comfortable with. So in the 40Ks and carrying mostly Bitcoin exposure, that risk tolerance is not that huge. Like if we have a 20% down move from here on whatever. If it's ETF rejection that cause it, that's news driven, and I would probably buy that dip. If it can't handle itself after people buy that dip, then I would look to get out. And that might be 45, 50, I don't know. It kind of depends on the flow. Got to watch the low time frames, but then keep an eye on the large time frames. All right, that's my bearish plan to bringing peace to your question. So that's how I do price expiration. If we're lucky, Ethereum does the same kind of thing it did in 2017, where it made this huge triangle the whole end of the year and does something like this. And then sometime late in the year, or like when Bitcoin chills, it does the same exact thing. This is all pea-brain stuff. Like, I'm not trying to be a genius. But if Ethereum then runs the fibs to some degree, my big dreamy type scenario is 6K. It may be at 6K by the time Bitcoin gets to 100K or whatever. So therefore it might be like I'm looking for the trade after that, like kind of Ethereum pulls up after the fact. If it hasn't broken out yet, that would be ideal. Like if it's still sub 4,400 or whatever, and then you play it from there. 6K, 10K, 12K. I get very uncomfy beyond 12K for now. That's my thoughts. When will DeFi move after all of this? Probably. Like I don't. Sure, if Ethereum goes to 10K, then DeFi starts looking real cheap. At the same time, this whole like multi-chain narrative that we've been talking about, all of that stuff could really be incredible. One other thing to think about: total addressable market cap. Bitcoin just hit a $1 trillion asset valuation again. The total market cap is $2 trillion plus now. If everything doubles, that takes us to $4 trillion market cap. It's possible to get into some territory where this total addressable global market cap is like $5 to $10 trillion. And then you say like, okay, well, who's buying, right? Like now what? Who becomes your buyer? Is it an institutional bid? Is there no more down? Is it just up only? Whew, I can't answer that. If that happens, I will have reached some goals that are worth risking off some, looking for different things, etc. So that's what I'll do. I'll seek different types of investment vehicles unless the trades present themselves to me. I don't think I'll ever be able to just give up looking for the trades. I like to see the trade. I like to watch. And there may become a time in life where I look for more obvious trades more frequently rather than, being in the trenches every single day. All right. Plebster says, let me buy your most expensive NFT off of you. Plebster, shoot me a DM. Every NFT is always for sale. That's something to keep in mind. Thanks for being here. I'll do a quick after show in a second. Appreciate y'all. We're going to cut off the audio version. Go to ledgerstash.com/matcha. Check them out. Make your trades there. Talk to you later.
Monuments crumble.